Okay, so we got a designation of a longer period for commission action, whether to approve or disapprove the proposed rule change to enhance capital requirements and make other changes. This is the big one that is causing quite the uproar in the industry. What they're doing is they're trying to increase the capital requirements of all these small and medium-sized players. So basically, I mean, it makes no sense, honestly. I wanted to read you some of the comments. I think I've done this before, but I just wanted to reiterate the importance of this filing. It's 1,293 pages long. Most of it's redacted, of course. But we do get a couple of comments from some of the members that are just appalled by this. Let's go ahead and take a look at one of those real quick. Where go? Where go? Oh, there it is. Unless they took him out. There we go. Okay, Bill Walker. This was sent Thursday. So I want you to look at the date. So this was filed. Look at the date here. This was filed when? When was it filed? 12/13/2021, right? Look at the date here. What does that date say? October 31st, 2019. So just think about that time frame, COVID, right? So subject is, as a takeaway from that meeting, please see the attached. We will use this information as the launch point for our November 14th follow-up call. We need to make sure that our voice is heard. This will not only affect small brokerage firms, but also issuers, transfer agents, etc. that have businesses or business with the small companies and brokerage firms. Small business, which is the backbone of our country, uses the brokerage firms to raise capital for their business, and this effect will have a drastically, this will drastically affect these small companies. Many of these small companies turn into large, thriving companies. We will be having a small firm call on November 14th with DTC, and it will give us a chance to let DTC know how we feel about this change. Well, I doubt they're going to give a shit, but hey, who knows? Below is DTCC's latest proposal. They are proposing to increase the minimum capital requirement tenfold. It clearly targets DTCC's smallest participants and makes no economic sense. The proposal discriminates against smaller broker-dealers, creates unwarranted barriers to entry, and is anti-competitive, and is therefore at odds with the goals of the Securities and Exchange Act. The proposal also makes no sense. Why would a firm that has a margin requirement VAR tier of $500,000 need a $10 million fund in excess net capital? DTCC's margin is supposed to account for the risk. So why does a firm that, according to DTCC, that could lose $500,000 need $10 million in excess net capital? The proposal makes even less sense when one considers that a firm with $1 billion VAR would also have a $10 million minimum capital requirement. He's right, that doesn't make sense. The proposed VAR tiers are extremely low and designed to target DTCC's smallest participants. It ignores the mega-sized participants that pose real risk for DTCC and instead discriminates against smaller firms that over the years have not shown to create much exposure for DTCC. It is simply ridiculous that a firm $500,000 at risk needs $10 million in excess capital, or 20 times the amount at risk, when a firm with just $1 billion at risk also only needs the same amount of $10 million. So to put that in perspective, someone that is $500,000 at risk on the smaller side now requires the same amount of capital that someone that's a larger player when they have $1 billion in risk. That's a shit crazy spread there. So what doing? If DTCC felt that it needed to raise the capital requirements, it would target the large firms that actually create exposure. This proposal is a thinly veiled attempt to eliminate DTCC's smallest participants. This is particularly offensive, given that there will be no grandfathering for existing member firms. This proposal is similar to DTCC's proposal in 2013 that was successfully defeated. Small firms need to stick together in opposing this proposal. And then lastly, we have this from Watchell & Co. This was also sent September 16th, the day before the Fed Reserve took over as central clearing in the reverse repo. Same with this one, September 17th. Ladies and gentlemen, this firm has been a member of the DTCC NSCC for more than 30 years. We recently learned of the current proposal to alter membership requirements by means of broadly increasing required excess net capital. Although the current proposal is far less egregious than its predecessor, since withdrawn from a DTC 2013 white paper, we suspect it suffers from at least one important deficiency of that effort. That similarity: discrimination against mid-sized and small member firms and in favor of the industry's largest participants. Specifically, the current proposal ties excess net capital requirements to VAR, with the lowest tier at less than 100K VAR and the highest at more than 500K. Firms at the highest level will see their ECN requirements increase by a factor of 5 or 10, depending on whether or not they clear for others, topping out at $5 to $10 million. But does over 500,000 VAR properly account for the largest firms in the industry? Shouldn't the scale and attendant ECN requirement of about $1 million for each 100,000K of VAR be continued indefinitely? Because the scale isn't continued. We have to wonder if the authors of this scheme really believe that it's a risk-based requirement. DTC and NSCC are regulated monopolies in a consolidating industry. Under no circumstances should they erect barriers to entry or cause further consolidation through excessive capital or regulatory requirements that are not based on risk. The overarching danger posed by SIFIs and SIFMUs are obviously well known to the authors of this proposal, but their importance is shrouded by a maximum ECN requirement of only 10 times that of the smallest member firms. Either the top firms are burdened too little, or the smallest are burdened too much. Please rethink the proposal. We appreciate your consideration. So they've got a plan. It's the stock market's not going to crash. So people following, some, I'm not going to name them here, but people that just can't get away from stock market crashing, it's not going to happen. Sorry to tell you. The worst that it got was with Archegos. They've cleaned that all up. And yeah, about to flourish, baby. Let's go, Brandon. Right? Someone. Hello?